This is your host, Stephen Sargeant, Around the Coin podcast. We have a premiere episode. Chris Harmse, who's the Chief Business Officer and co-founder of BVNK. It's a little play on words about turning the banking industry upside down. They're a fintech that leverage stablecoins and other crypto assets to make sure they get business to business payment transaction. They're revolutionizing the payments infrastructure. We go deep about building culture within the organization. We also talk a lot about what stable coins and the regulations that are definitely top of mind when it comes to MICA and other locations. We talk a little bit about the regulatory system, but more importantly, we talk about some of the use cases where stable coins and companies that want to start accepting crypto and stable coins, where they're positioning themselves in the market and how they're thriving in emerging markets like Nigeria, Argentina, LATAM, Brazil, everywhere you can think of. This is a really great episode. He's a really great guest, very conversationalist, and this is one that you must listen to. Talk to you soon. Welcome to another edition of the Around the Coin podcast. We have Chris from BVNK. Chris, let us know, maybe tell us what your Chief Business Officer is, you're a co-founder of BVNK. Give us a little bit of a quick background about yourself. And I really want to jump into some interesting questions because this is a hot topic. Fintech, crypto, foreign exchange. This is what everyone's talking about right now in the industry.
Yeah. Hey Stephen, it's really great to be here with you today. So as you said, I actually have a traditional finance background. So I spent a couple of years in banking, on different sales and trading desks, and that really sparked the interest with payments. I guess I was doing payments without really knowing I was doing payments, sitting on an FX desk at BNP Paribas. That's what it was at the end of the day. So that was that, and then effectively, fell down the rabbit hole into crypto back end of 2016, really sitting on the desk, understanding and looking at this saying, how could, execute a trade in a millisecond, but the settlement actually happened on T+2 or even T+10. Let's say if the Swift message didn't complete and the payment got lost. So that was kind of my introduction to crypto and, using my payments brain, but that kind of quickly led me into setting up my own hedge fund with my ex-business partner. And we ran a kind of a multi-strat fund, and then ran and launched a crypto fund inside that. This was 2017. So, that was actually my introduction to stablecoins, and we really started using stablecoins early on to move money between different platforms, that original use case. And that quickly parlayed into meeting Jesse and Don, my co-founders in the business. And, we linked up and, we were really looking at how could we use Bitcoin originally to do cross-border payments, and then quickly fell onto stablecoin, obviously given the stable nature of it. So that's kind of what happened there. And I've worn multiple hats in the business, over the last few years. But right now, very much focused on, new bets, strategic partnerships, business development, these sorts of things. But I guess, maybe to give you a quick background on what BVNK is a global payments platform, and we're really excited about accelerating the global movement of money. So we do that by bringing banking rails and blockchain rails together in a single platform. And that really allows our, 200 plus business customers to do payments at internet speed, which is really exciting.
I love it. You have so much there I want to unpack and unravel. Talk to me about what it was like setting up a crypto hedge fund in 2017. That was the peak ICO era. 90% of those were scams or, just people cash strapping. Talk about trying to set up a legit operation like a crypto hedge fund, or at least a hedge fund that had exposure to crypto back at that time.
Yeah. So, I was on that trading desk, spending a lot of time, in and around the investing side of things, and linked up with my ex-business partner. We really ran a cool multi-strat strategy. And naturally we saw crypto as this new, this new kind of capital formation vehicle, as ICOs were. So naturally it was the Wild West. It probably felt like how some financial markets looked in stock markets in the late 80s and maybe derivatives in the late 90s and that sort of thing. So it was super exciting to do. Sadly it was the Wild West and, it didn't work out exactly how we wanted, but, I wouldn't trade it for the world. It was a great learning experience and really got me down the rabbit hole in crypto and really, sparked the interest where taking that payments knowledge I had from BNP Paribas and then saying, well, look, here's a new payment rail, a global payment rail that, transacts 24/7, 365, so it really kind of got me onto that whole stablecoin thread and, we just went deeper and deeper.
As a founder and entrepreneur, I always think, you're thinking, even myself, I'm like, let's start a media agency. Obviously after the Gary Vee era, everyone wants to do content. If you can act like yourself and get paid to do it and record it, everybody wants to do it. You're talking about crypto 2017, 2018. Everybody's looking at, how payments can solve remittances and cross-border payments. What makes you think like, hey, let me go and still continue on? Like, is there something that you saw that wasn't being actioned by another organization, or is there like, this is such a deep flaw, and this is going to impact everybody, that there's going to be enough market share for 10 to 100 organizations, not just BVNK?
Yeah, that's a good question. And I think, when you approached it, you have to approach it quite cautiously at the time. And there were several use cases. And if you remember correctly, many ICO projects, are promising the world, it's going to change the world and this sort of thing. But really the way I approached it is like, it was quite pragmatic. I saw the pain points under the hood being in traditional banking for, 5+ years. And then I saw this new technology that made a lot of sense to upgrade, existing payment rails. And, you just kind of had to have a little bit of faith that, this is where it was heading. And then what we saw early proof points, i.e. you could use these stablecoins like it's 24/7, 365. They worked on the weekend. And then you just think, and through time, if you go back in history and look at technology adoption, better technologies do get adopted. It might just take a bit of time, but if there's something wholeheartedly better, it eventually does get adopted. And I think you got to take a bit of that view, especially in those early days to go, how exactly was it going to unfold? We all didn't know, but was it better payments technology? 100%. And as you start getting proof points, like customers start using it, new verticals start using it, stablecoin market cap grows, payments volume increases, that just solidifies your confidence in what you're doing and what you want to keep building.
Was it tough having conversations with whether it's investors, other businesses that you're trying to sell those early days? Stablecoins was still fairly early back at that time. I think Tether was, and it still is, the biggest one, but it was mainly only used, not only, it was mainly used by traders, right? Hardcore traders in the crypto space. What was the conversation you have, or was there any challenges or obstacles that people were like, hey, you know what? I can't touch these because there's not enough compliance or regulation yet. So when we kind of create that framework and those guardrails, then we'd love to send cross-border payments with other businesses.
Yeah. No, exactly that. So at the back end of 2019 and early 2020, when we really started looking at this, this payment side of things, it's, stablecoin market cap was 3 billion. It was very much a singular use case. It had all this potential, but was really, as you said, only really being used for that trading use case. And what we started seeing was there were certain verticals that started, like wanting to adopt better payments technologies. So you get one or two customers, you start talking more. Regulatory frameworks were still very fresh. Obviously, we've got several really good ones coming into force now and over the last year or two. But it's those early signs and those early customers that, that trust, like, I want to do this. But what we found early on was you actually still had to go fiat, stablecoin fiat. They didn't care what rail you used as long as the money got there cheaper and faster than a traditional rail. So we were able to build the infrastructure on both sides. And that's really the genesis of some of the payments we started doing. And what we found is it was fiat, stablecoin, fiat. And then as you moved through time and more businesses started adopting it, more industries were looking at it, they were comfortable holding stablecoins, or they were comfortable taking a stablecoin payment. So it quickly went to, actually, I'm happy to touch one side of that stablecoin transaction. And, now fast forward 2024, you see, Visa, WorldPay, all these global payments companies, PayPal, all willing to either launch stablecoin products or interact at scale with stablecoins.
What are your thoughts around, like, before we jump into BVNK, like the payments industry has always been so siloed, archaic. Why do you think even some PayPal and some of these companies, why do you think it took them so long? Usually it's these big players that are on the cutting edge when it comes to technology like blockchain, cryptocurrency, and digital assets. Why do you think it took them so long? Just similar to crypto, it's always going to be used by casinos, gambling first, right? Illicit actors first. Usually the payments, they're, payment providers that actually disrupted the industry. Usually they're on the cutting edge. Why do you think it took them so long to kind of adopt digital currencies, obviously?
I think it's that classic, inertia of these very large fintechs. I mean, think about Visa, the original fintech, so to speak. They built such a moat around VisaNet. Stablecoins come in and can potentially disrupt VisaNet. So they take a cautious approach and try and incubate it inside their innovation hub. Same thing with PayPal. I mean, 400 million wallets, a really good business. Are they really pushed to innovate there? And where I think you saw the adoption come was this new wave of fintechs that were coming in and saying, look, I actually want to use this better technology and this better infrastructure, payments infrastructure, to build new products, services, and use cases on top. Whereas all the fintechs who are incumbent, making really good money, just don't have that, I guess, push to innovate anymore. So I think that's why it took. And then naturally, when you're that big, regulators are, you can't be that innovative on the regulatory front. You really just have to take the cue from the multiple regulators you end up having as you scale as a financial services business.
Yeah, you don't need to take the risk of being first in the industry to your point, right?
Yeah.
That's how many else take that risk. You have enough money to either buy these fintechs or you can, mimic or copy the same kind of technology and the concept yourself later on once the kind of regulatory storm clears. Let's get into BVNK. So it's a play on words, I believe, or so I've read, turning the banks upside down, which I think it's cheeky and it's clever. I love it. What was the funny story about coming up with the name BVNK and turning the banks upside down? There must have been when you're sitting around at a table. Saying, what should we call this business?
The table was back and forth in a Slack chat. But look, we landed on BVNK. We really liked the name. We had this kind of vision of, the Z spinning and going like dollar, euro, sterling symbols, as it's fun, turning banking upside down. But, as you would know, it's quite sensitive globally to call yourself a bank. There's a lot of regs around it. So, pronouncing it BVNK made more sense. But you've always got that little play on words that you can use in and around customer conversations and with partners.
I think banking professionals would laugh at that. They don't have to find that funny. Now, I think BVNK is extremely deep when it comes to things like product and platform offerings. You're focused on payments, payouts, compliance. But starting with payments, what is the most common use case where partners are coming to your platform? Like, what is the most common use case? And then maybe a little unique use case or something that you might see trending up lately. You're like, oh, that's interesting. Not a lot of adoption, but very interesting.
Yeah. So we've got 3 core stablecoin use cases or payments use cases. And really, what that looks like today, the platform is really, if you take the bottom layer, you've got, full licensing on the fiat as well as the crypto asset side. You then have a crypto infrastructure stack sat on top of that's node management and, wallet management and that sort of thing. And then obviously on top of your fiat licenses, you have, banking partners that give you access to domestic payment rails. And then on the crypto side, so you've got this full fiat suite and you've got this full crypto asset suite. And that blended together allows really three core use cases. One is coin settlements. So that is allowing businesses to settle either their merchants. So this might be a payments company looking to settle a merchant in stablecoin. We then have stablecoin pay-ins, which is accept crypto payments. Think of that as like a merchant looking to accept crypto payments at checkout. That can be done through a hosted payments page or a payment link or a full integration of our APIs. And then the third use case, which is a more recent use case that we're quite excited about, is one that we enabled for one of the leading global HR payroll platforms looking to actually do stablecoin payouts into their contractor base who sits predominantly in emerging markets. So these are, let's say they're devs sitting in Argentina and looking to take their salary in digital dollars. So those 3 core use cases. So stablecoin settlements, more of the B2B use case, stablecoin pay-ins, merchants accepting payments from consumers. So that would be a C to B to B flow. And then stablecoin payouts, actually paying contractors, employees, partners, which is generally more of a B to B to C flow.
I love that. And, I have friends, obviously, in the industry. They're in Brazil. And they're like, I need to get my income in stablecoins. We can't trust the fiat. Not that they can't trust it. They can't deal with the fluctuation of the fiat dollar in places like that. How does things like elections, or is there any other global circumstance where you're like, oh, we see maybe more, of our customers paying out their employees or contractors in stablecoins, or we see more companies switching on that switch of, hey, we accept crypto or Bitcoin. Are there any trends that you see, especially with the elections and, global financial, what would be instability in places like Nigeria and other countries around the world?
Yeah. So you hit the nail on the head there. Is if you take a 100-foot view of where stablecoin adoption is happening, I guess you can split it up into at the consumer level, at the business level. And at the business level, you're really finding the 24/7, 365 nature of stablecoin settlements really driving businesses to start adopting. And obviously, for a business to adopt, you need better regulatory framework. So to your point, favorable regime, favorable governments that are putting pragmatic regulation has really driven some of those business adoption of stablecoin use cases. But more interestingly, sometimes, when we take a zoom out and look at that consumer level adoption, if you look at let's take the UK, for example, someone in the UK doesn't really need to use a stablecoin. You have a real-time payments rail being faster payments. GBP is, stable and, generally, well-managed economy. When you start going into markets like you mentioned, Argentina, Nigeria, some other LATAM markets. Firstly, those end consumers are, quite young. They're generally quite technology savvy, so that there's actually high levels of technology adoption there. They intuitively understand, purchasing power, inflation risks because of this economic fluctuations in their country. And then what you find is those consumers are actually the ones adopting stablecoins. So to your point, that stablecoin payouts use case is really serving those consumers who are saying, look, I can't get access to dollars. I don't want to hold my local currency, and I'd much rather keep digital dollars, that I can move around 24/7. And that's really driving that consumer level adoption. And then obviously consumer platforms serving those consumers are starting to go, okay, cool, I'm a neobank in LATAM. I should probably include a stablecoin offering, and then you're starting to see some of these stablecoins come to market.
Yeah, because I'm assuming in those markets, if you've been around for at least 15 to 20 years, at some point, like Greece and Argentina, you got to the bank and the bank had said, well, you have 20% less than you did yesterday, and there's nothing you can do about it. So I think those markets tend to hoard money in their mattress, for lack of a better concept. Yeah. But that's still hard to do if you have all this cash. What can you do with it? Especially if the value of that is predominantly going down and stuff like that happens. So, having these tech savvy, as you said, youth, this is their version of keeping cash under the mattress, right? But now thanks to companies like yours, they can spend it, they can interact, they can get paid in it. That was the hardest part. If you can't get paid, if nobody's dealing with cash, if your employer can't go to the bank and take the cash so they can give you, it's really hard to kind of do that locally. And then internationally, you can almost forget about it, because as you said, you can't even get access to US dollars, if not fiat dollars. What are your thoughts? Why? I'm assuming if somebody flips on a switch and says, hey, we're a Starbucks or a small coffee shop, we want to accept crypto. A lot of people might look at that like, oh, they're just trying to get in the news. But I'm assuming, is it complex to send somebody out? Or because of companies like yours, it's super easy for these companies to turn on the accepting crypto sign in their door, convenience store. So it's a little bit easier than maybe, let's say 5-6 years ago, where it was so impressive when a company was accepting Bitcoin.
Yeah. So I think, we're naturally an online payments platform. Yeah. And so there are some, interesting and exciting companies doing point of sale device. But I think, crucially, we abstract all of that complexity of the blockchain away. So it's a simple integration for the merchant. They can be up and running in, if they use a hosted payments page in a matter of days, if they want to do a full integration, 1 or 2 weeks. And we take care of everything. We do the screening using, the Chainalysis and, crypto screening tools. We, provide the wallets, we do the conversion back to fiat, and we settle that merchant in fiat. So effectively, a merchant can add crypto as a payment method. So alongside the credit cards, alongside local payment methods, and add crypto super quickly and actually never have to touch crypto. So they can give the consumer choice and then actually just, be settled in fiat. So, and that's really where I think the merchants are driving to actually include this, is because they're saying, look, I actually don't need any crypto licensing. All of that is taken care of by us, BVNK, and we effectively allow them to receive those stable coins or receive those crypto assets and be settled in fiat.
Almost as easy as accepting credit card at this stage, then.
I would say probably even easier, because credit cards...
the cost is probably it's the same as a lot of people in Canada or companies accept American Express, because it's so expensive for them to take that charge. That's one credit card they don't accept. Talk to me, you've been in business for 3 years, especially, for more than 3 years, but the last 3 years has been tumultuous, especially with Terra Luna going down as the algorithmic stablecoin. How did that impact your business at all, or even the sentiment of stablecoins? We know stablecoins use in 2/3 of all crypto transactions, which is a mind-blowing number when you really think of it. I don't think we talk about enough in the industry. Directly, there's a share you're looking at that percentage. Definitely. But was there any negative impact to the Terra Luna incident, or was that just one of those just comes with doing business?
Done, with Paxos and PayPal, and then you've got generally unregulated, more DeFi-centric stablecoins, and these were these algorithmic stablecoins, which Luna Terra was one of those. If you go back in time and look at the history of pegged currencies, whether they were fiat or the Thai baht in the Asian financial crisis, any sort of currency that tries to peg itself, it's ended in, let's say it's ended in tears. So no one's really found a model, and what some of those algorithmic stablecoins were doing, where they were just looking to try to find a more algorithmic way to peg that versus trying to peg it to the dollar like some of the previous fiat countries. So I think all of those algorithmics are still an experiment. I think there's some really interesting projects out there. But for us as a business, we naturally centralized, regulated, given we highly regulated ourselves. We have a very specific token vetting policy. So multiple different, parameters we need to look at to actually list a stablecoin on the platform. These are, reserves. Is the stablecoin issuer regulated? Where are they regulated? How do they manage reserves? Are the reserves backed by US treasuries, bank deposits, or Bitcoin or these sorts of things? So all those parameters then feed into what sort of stablecoins we add. And therefore, because of that token vetting policy, we were obviously not exposed to Terra Luna at all. And so it didn't really have an impact on our business. And I think it quickly became, the market quickly understood post that look, this wasn't the same as Circle. It had flawed economic incentives baked into the smart contract. And just using digital dollars, think of it like money market fund on the blockchain, effectively, just giving it 24/7, 365 access is really the way to go. And especially for the payments use cases that we enable.
How many stablecoins do you offer? Because it doesn't seem like there's a lot. Like, I think most people can probably name the top three. But how many do you offer? Because you named a couple algorithmic ones there that other than Terra Luna. How many do you offer on your platform?
So we only offer the centralized regulated ones. So that would be Circle, Tether, PYUSD and FDUSD, which have picked up a lot of the BUSD, the Binance market cap, the Binance stablecoin that's got shut down by Paxos. So we've got those four, and then we've obviously got, let's say top 15 crypto assets because, through our gateway, you can obviously receive and accept crypto as well. But you'd find 95% of the payments are really stablecoin related.
I love that. And how are you talking about regulation? How do you balance this regulation, especially in certain jurisdictions? It looks like, maybe Tether won't reach, the satisfactory requirements in this jurisdiction, but they do in other jurisdictions. How do you manage that internally? Or you're like, hey, well, Tether could be used in ABC. We have Circle here for XYZ. Is that how you kind of cover your basis? They just can't touch each other in certain jurisdictions. Like, how do you balance on those different global regulations, especially those that are emerging quite rapidly, I would think?
So because we're a global business and have really been executing on a global licensing strategy over the last few years, and that comes with, finding the best regulatory talent to go out and get our licenses, finding the best compliance talent to actually operate those licenses once you take them live. And that really alludes to, we've got a Singapore MPI license application in. So that's kind of the APAC side. We have, licenses in the EU and the UK. And then obviously we're starting to get MTL licenses in the US that again allow us. So because we have these global hubs covered, obviously Asia, Singapore for APAC, EU and the UK for Europe and the UK, and then the US for the US, we are able to, piece together the right flows and I guess the right payment flows for different merchants and exactly which merchants should be facing which entity. So I think because you're globally regulated and you can, piece those payment flows together and onboard merchants in the right jurisdiction, it becomes a lot easier to actually serve certain markets and then also serve certain, list certain stablecoins that might only be able to be, be listed in a certain market. So by having that global coverage and that licensing team and that regulatory and compliance team, it's really put us ahead of the game in terms of being able to ring fence certain use cases and certain issues.
And that's one thing I saw on the website. It's kind of like this compliance first attitude. He gave us a little bit of insight there. We don't see many fintechs switching to compliance first. They'll be like, hey, we'll do compliance, but you never really see that as one of their options on their website. Talking about why that's important. I think you said like, hey, we need stablecoins and certain regulations. And that also sounds like anyone listening to this is like, that sounds like a heavy and expensive load. Talk about us, speaking to investors or your CC team of the focus on compliance, because it usually comes from the top and trickles its way down to the people that are probably dealing with the businesses that you're working with.
Yeah. So, it's such a vital point to any payments business. And especially, we recognized early on as a leadership team that we wanted to be, one of the most regulated, crypto payments businesses in the industry. And, we aggressively went out to execute on that strategy. And I think, if you want to land the biggest and baddest enterprise customers, you need to have the best regulation and, have that right, that top talent and that team to really operate these licenses. So that was really the strategy. It's like, because BVNK sits at this intersection of blockchain payments and bank payments, and we truly believe that, stablecoins and blockchain payment rails are really the next innovation in payments infrastructure. And if you think, over time, these blockchain rails are going to weave into, traditional payment rails, you need to then be regulated on both sides. And, with that comes, as you said, it's a heavy compliance burden, but a burden that we are happily leading with, because it's the only way you can really build the business you want for longevity, for staying power, and for really landing these enterprise customers we have ambitions to land.
Talk to me about the regulation a little. We saw, the U.S. is struggling with filing the comprehensive regulation. MiCA seems to be off to the races there in the EU. But yeah, as you said, you have places like Singapore, Hong Kong now, and even Dubai is starting to get involved with their, what their requirements are for a dirham-backed stablecoin. What do you think about? Are you like one of those crypto or fintech companies are like, yes, more regulation as clear as possible is the better because we're willing to comply? Or is it tough for you to operate in markets like the US where it's kind of regulation by enforcement is what a lot of people are saying? But this is a lack of guidance. I don't think that's completely true. I think companies know what they're supposed to do. They're kind of like dabble around that gray area and sometimes get burned. What are your thoughts about the regulatory space of stablecoins around the world?
Yeah, I think, it's come a long way over the last years, let's put it that way. I think there's some really, the topical one at the moment is obviously MiCA in Europe. That kind of came into force, at least in its first instance at the end of June. Us as a CASP, crypto asset service provider in the EU, need to be compliant by the end of the year. So there's these pragmatic regulations coming in. To your point, we want more clarity, more guidance on how to treat crypto assets, specifically crypto assets for payments use cases, because that's obviously slightly different for investment purposes. So I think that clarity is coming. There's obviously stablecoin bill in the US. The UK government, also mentioned they'd be putting out a stablecoin bill or, legislation later this year. So I think it's all heading in the right direction. We obviously welcome that and, are fully staffed up to deal with these regulations and get those licenses and operate in a regulatory compliant way. And I think it just adds credibility to the industry, but also allows bigger, allows stablecoin payments to seep into the fabric of the payments ecosystem where, like I was mentioning earlier, big enterprise customers are now able to use it because they've got regulatory clarity. They're allowed to enable stablecoin payouts in their platform. So we're quite excited about these new regulations coming. Obviously they come, with a lot of work behind the teams work, late hours. There's a lot of late nights getting applications together, forming policies and procedures, making sure that those are fit for the regulation, and then obviously implementing that and then running that. But, I think we're really confident in the team that we built, and it's led by ex-banking professionals and, even ex-law enforcement professionals who've been doing financial crime and compliance for quite some time. So, we're well prepared and ready for it.
I love it. There was a Forbes article talking about Tether linked to money laundering. Now, I'm a former BitFinex investigator, so I love the team at BitFinex and Tether. I'm not really trying to point them out specifically. What do you think about that? Do you just think well, if Tether's doing most of the transactions, there's going to probably be most of the money laundering, just like the largest banks are going to have the most transactions. What are your thoughts about, illicit actors using stablecoins, which in fact, many of these stablecoin issuers can actually freeze or redeem the stablecoin and pretty much make some of that stolen crypto assets like, Tether or Circle, make it almost useless to the criminals. What are your thoughts about stablecoins being used for crime?
Yeah, so I think there's definitely a bit of a misconception. What we actually find quite exciting about the blockchain is that you have such a great view, the transparency that the blockchain gives you to look into different payment, to look into the entire payment chain. So we always, we've hired, like I mentioned, very senior, compliance folk from banking, and they always come in and they're so surprised at what a tool like Chainalysis can give you. You can basically see a payment from the origination of that first token generating event through its entire history, every single wallet that it ever touched. So with that, armed with that information, you can make way easier risk decisions and that sort of thing. And then to your point as well, companies like Tether are actually able to freeze USDT in certain wallets if it's been linked to illicit activities. So I think there's a bit of headline grabbing with some of that. And if you actually go one level deeper, you actually find compliance professionals and financial crime professionals love actually working in crypto because of all the information they get and the intelligence community that's built around these tools in crypto. And that gives them a lot more control and a lot more comfort that they can risk rate and risk all these things properly. And then I guess to your point, exactly, you could argue with the same sort of thing on the dollar. Like the USD, US dollars are used for more illicit activities than GBP and euro, but that's purely because US dollars is the world's global reserve currency. Think of Tether a little bit in the same, in the same vein within the crypto space. But, I do think it's important to note that the blockchain gives you way more transparency than you'd have in the fiat world. You get way more intelligence and enriched data to understand what's happened to that transaction, and therefore can actually, de-risk financial crime, a lot more than you can in the fiat space.
I love it. Obviously I'm a big Chainalysis supporter. I produce their podcast and a lot of the work, the training that they do. But I think as a former, investigator at HSBC, I'd much rather see the Chainalysis tool show me the flow of funds than trying to look at a badly scanned check to see if it was modified or fraudulent anyway. And I think once you show the tool to people, and I'm a trainer, so once I show the tool to people, they're like, oh, I get it now. This is why this might not be the best tool for money laundering. Is there going to be money laundering? Of course. If I'm a criminal and I say, hey, do I want $100,000 in cash or $100,000 of stable coins? I'm probably going to choose the cash every day of the week. So it's just one of those things. Talk to me about layer one. We're always talking about blockchains here and protocols. Layer one seems to be pretty revolutionary from a full ecosystem payments play. I don't even want to try to describe it and not do it justice. So tell me a little bit about layer one and probably the excitement that goes on within the organization about this platform.
Yeah, so layer one was one of those us scratching our own itch, so to speak. So, early on when we started, our CTO Don, there was no Fireblocks back then. So he had to build a lot of it, build a lot of the crypto infrastructure stack himself. Figure out how to do security and all this sort of thing. And, through time, we had a mixture of our own crypto infrastructure as well as Fireblocks. And then, we really struggled with actually just being able to do it exactly, the way we wanted to do it. And you had bugs and, uptime issues and these sorts of things with some third-party providers. And it wasn't really, a lot of those solutions weren't really geared to payments use cases. And us being a payments business, we wanted a seamless crypto stack that works specifically for payments use cases. So Layer one is essentially our crypto, infrastructure stack unbundled as a product that other companies can now use. And, BVNK is the first customer of Layer one. But, at its core, Layer one is core infrastructure for stablecoins. It enables businesses to swiftly launch stablecoin payments products without actually ever having to develop their own technology or even have any blockchain engineers on staff. So it includes a vault where you do key management and store crypto assets. It includes treasury management where you could sweep wallets, spin up new wallets, sign wallets to end customers, and has a payments module to allow you to do these pay-ins as well as payouts. It then also has quite a sophisticated trading engine, which allows any payment that comes in, let's say in stablecoin, actually wants to get out to euros. So it will route the best way to a multiple liquidity venues to actually source the best liquidity and best execution. And then obviously, finally, super important, transaction screening. So it allows you to take your Chainalysis or your elliptic credentials, plug them in, and then actually do the screening on these as well using your credentials. And I think the number one or the crucial thing really, it's self-custodied and it's self-hosted in your own AWS environment. So that's quite key where, BVNK never have any, can never see your data. That's all hosted. And so, that security is right up there.
And who are your top customers? Who's knocking down the door to get access to layer one in your opinion?
So these are less technology savvy, let's say OTC brokers. They need to manage multiple different, crypto assets. So they've really, so some of the first customers that are going live are CDES looking to I want one place to do all my digital asset and treasury management, super easy to use. I have a UI like a banking platform. I don't need to have a bunch of engineers to figure out how to integrate with Fireblocks, et cetera, et cetera. So those are some of the first use cases. We're also seeing payments companies who are fiat only and they have fiat infrastructure today. And they're like, look, I actually want to launch this, but I'm not going to go out and find a node provider and a wallet as a service provider. And so it's I actually just want to launch some payments use cases. They can take layer one and quickly launch a pay-in and a payout product using the tech stack. So those are the first two real verticals we're finding product market fit in.
Could you see it being used in places like Saudi Arabia? They're building this kind of smart city neo where it's I don't know what the payment structure is. I'm assuming with a futuristic city like that, or these startup cities that you're seeing people congregating in one general area. Can you see an organization, you say, hey, this is what we want to powerless city. We want kind of its own infrastructure that's a little bit outside of what everyone else is using. You see smart cities kind of adopting this technology, being like, hey, we have one thing that everybody's using within this like confine or parameters.
But I think it's, you could think about it like, you're going to launch a new city. How do you want people to exchange economic value in that city? Do we want to build our own real-time payments network? Probably not. There's this things called blockchains. They work super well. They scale. They can do, high throughput. And then there's products like Layer 1 that allow you to quickly launch, payments use cases on top of that. So I think you can definitely see, I guess, little self-sovereign, cities popping up, and you're using crypto technology as the main payment rail, the main way to transfer economic value.
Awesome. We had a discussion about stablecoins without talking about central bank digital currencies. Obviously, on different size and scale, there was an interview that we were hosting with Chainalysis and Circle, where the Circle professional was like, hey, the government's great. But, you want the government making regulations for planes. You don't want the government to actually be making those planes. And that's what it feels like they're doing with CBDCs. They're great to regulate stablecoins, but you don't want a public sector company, creating digital assets like a CBDC when the private sector's already done such a great job. What are your thoughts about CBDCs and how it plays into your world?
Yeah, so I think you're exactly right. CBDCs, I think nation states have, taken a step back and looked at the development of the crypto industry over the last couple of years. And then to some of the points we were discussing earlier, payments does seem to be crypto killer app, over the last, specifically over the last 5 years, if you look at, volumes of payments going through and the growth in, stablecoin market cap. So nation states are obviously, looking at that and going, look, I don't want to lose control of my currency, and then saying like, how do I bring this in-house? And exactly to your point, I don't think they're the best to build the technology to run, many of them do run their local payment systems, but again, that technology is, is outsourced and built by a third party. So I think, they're taking a look and experimenting. I don't think many of these projects actually come to life. But, at the end of the day, markets outside of, if you think about those emerging markets that have, like Nigeria with the e-Naira and these sorts of things, fundamentally, if you've got runaway inflation, economic issues, your citizens still do not want to hold your currency, whether you put it on the blockchain or put it in or put it in cash under your mattress. So they're still going to opt for dollars, whether that's dollars on the blockchain or dollars in a form. So I think it's telling to see, some of these emerging market, CBDC projects fall flat. But I think that's just the nature of, they're not going to fix their economic issues by putting their local currency on a blockchain.
That was going to be my next question. Like, what do you think these jurisdictions like Nigeria and Venezuela are doing wrong? But that's exactly it. If people don't want it in fiat, there's a small chance they're not going to want it in any other. You put it in digital, in renting, smoke signal. They don't want any of it. One thing we don't usually get a chance to talk about on this podcast is actually around company culture. You pride company culture there, and I see why. Glassdoor reviews are through the roof. I think it was 4.3 or 4.6 out of 5, which is obnoxiously great, right? When you think about the type of employees you had and are still there. What are your thoughts about like how do you prioritize good company culture? It's funny, I had an event yesterday where we had a company culture person come in and give some expertise. And what he said is where you put your resources and your investment, right? If you look at where everyone's spending their money, especially we see in the crypto industry, buying arenas, renting yachts, putting your logo on race cars, but they never had an internal meeting with any of their team members. There's no HR or people department. What are your thoughts about kind of putting your money where your mouth is when it comes to company culture?
Yeah, I think, at the core of like building a strong company culture is like, firstly, you want to be mission driven and working at the edge of some new industry and trailblazing. So, we have this mission of accelerating the global movement of money. I think the people that come and work with us are looking at that and going, if I want to be a part of this, I believe in stablecoins and crypto as the next version of payments. So we find like it almost self-selects for some of these people, but then at the end of the day, it's high trust, a high trust environment. So if you bring in A players, firstly, they want to work with other A players. So if you have a relentless focus on, high talent density, you get A players in, they're super pumped. You give them a lot of responsibility. You give them the ability to make decisions and execute. And then there's high trust between and within teams. I think, culture takes care of itself. So we really focus on, speed, intensity, integrity. These are some of the values of BVNK, and we really live those each day. Like, what does that mean? We spend a lot of time, given we're a distributed organization, we spend a lot of time getting teams together, because obviously that just breaks the barrier if you're speaking with someone in person. So we do a lot of meetups with the team. And yeah, I think it's really just that, give the guys high agency, a lot of trust, working on really hard problems in a mission-driven company. And you find that the output is these 4.7 ratings on Glassdoor.
I think people really underestimate with an offsite. They think it's like, oh, these team building exercises. But the offsites I've been to, it's like sometimes you see something in a different department. You wake up early in the morning to go for a run, and they're there having breakfast at the same time. You sit down and talk, and then you build that connection. I don't think people value that as much as they probably see these TV shows and they're like, oh, it's like these just a fancy way for the company to spend money. But I don't think they realize, like, especially the digital nature and the deep-seated connections that a good offsite will bring.
No, absolutely. It's vitally important. We found that, a team can go away and, this doesn't even need to be company-wide. You can go away as your function. You can go away just as your team. Just getting out of that work environment, not speaking to someone through a screen because a lot of the team are distributed, getting to know them on an individual level. When you start getting into friction situations and that trust has been developed, that's when you can move fast and get through these things, and it doesn't create wheel spin and that sort of thing, because they trust each other. They spend some time. They know each other's family names. They know their kids' names. They some of them spend time outside of work together. So I think that element is really crucial when you're trying to hyperscale a startup specifically, because naturally there's going to be friction, and naturally things it's going to be high intensity and long hours, and it's actually that trust between team members that gets you through these things.
And I'm so glad. I don't think Slack had huddle when you were coming over the BVNK. So glad they added that, because I'm missing comma, and a couple capitalized words. And
exactly.
You missed the whole tone of a conversation. Super interesting. How about you personally, though? You work, obviously, manage maybe when you're in different financial institutions, but it was never your baby. What's it like when you have to transition and you're working on teams where it's like, kind of you're on it, it's your ass on the line, for lack of a better phrase, right? It's your baby. It's a little bit different when someone else's baby that's paying you to kind of manage a team. What was that transition like, especially when you're going from like 3 people to 300 people over the last 6 years?
Yeah. I mean, short answer, it's a baptism of fire, basically. No, look, it's, I think, one thing I've learned over time is, like, you have to lead by example, effectively. So if you set the pace and, you set the pace in the company and you work that, other people will follow that and give you that, give you that energy back. And then at the end of the day, for a startup and, for teams, the speed and intensity are competitive advantages, like doing things quickly with a high level of intensity and really good focus. You'd be surprised at what you can deliver with actually quite a small team, and we've really, really focused on scaling in phases. Really, we're doing a lot with a small team, getting to a certain level in the business, then going through a bit of a hiring spurt and then resetting, bedding that down, building that trust again, ready for the next push. And as we've done that, I think each level, it's felt less chaotic than you would think, going from like 3 to 300, but it's because of these phases. You go, we bed it down, you then go again, you bed it down again, and you go again. And the next thing you think you've got a pretty sizable team, but, still operating and executing at pace with intensity.
I feel like I'm challenged at 3. Even with 2 people, I still think that's fairly challenging. So I'm glad it gets easier, and it maybe stays the same based on your perspective. Talk to me a little bit about the conference that you guys hold. Half-day conference, you just had a second year. You're probably building, bringing in your clients, customers, people in the ecosystem to discuss payments, especially currency, LDN, I believe the name of the conference is. Give me a little insight of what are people learning, what are people doing there, and where do you see this conference going? Is this going to be one of the pinnacle conferences in the industry?
Yeah, so I mean, firstly, absolute shout out to our marketing team who hit the ball out of the park every year with this. So yeah, exactly that. We have our own conference called Currency. We take that on the road to London. That's why Currency LDN, and then we take it to New York with Currency NYC. And it's really just bringing thought leaders from across the payments and crypto space together in a room. Agendas are generally about, emerging trends, regulation, what we're seeing from a use case perspective. There's some really cool product demos that that we'll do, showing some of the interesting and cool stuff that BVNK is working on. So we really found this format to be great to interact with partners, to interact with, prospects and existing customers, to bring investors along. So, there's obviously a plethora of conferences, across the crypto and the payments landscape. And we wanted something that we could control the agenda a bit more, set the agenda, set that invite list, and I think, it's been really well received, by the people close to the BVNK, and, we expect it to go from strength to strength.
That's awesome. For the price of these conferences, I'm looking for you to sponsor or get someone on the stage. It's probably cheaper to hold your own conference anyway. Has there been any changing with themes? Like, obviously, with conferences, you're trying to appeal to conversations that the wider industry. Has AI stuck into the conversation a lot more? Like, what are your thoughts about anything that's kind of come up in the conference where people are like, hey, they're kind of talking or taking sidebars and having chats about it more?
Yeah, I think just, as much as like we sit in stablecoins, this is our bread and butter, we live and breathe it every day. It's actually hasn't permeated. It's not yet mainstream, so to speak. So even within payments itself, there's multiple different, payments technologies, open banking. There's, cards are still, massively adopted around the world. Local payment methods are still on the rise. So I think stablecoins generally is still that topic of conversation. Obviously, there's sidebars as, when, the real crypto native folks are talking about, that topical crypto project at the moment, or new things we're seeing in DeFi or that sort of thing. And then also, I think what's been creeping more and more into the conversation is the regulation and the compliance elements, and, this financial crime compliance you can do with Chainalysis. And, we recently had the Chainalysis team do a showcase on how we use Chainalysis in our business at our event in London. It was super well received. People's eyes were like, this is amazing. Like we spoke earlier, like, look, this is exactly all the stuff that you can see. So I think it's those things that, stablecoins is still new and fresh. So there's still a lot going and talking on there. It's like, okay, but what are the risks of that? And then how do you mitigate those risks using these compliance tools, pragmatic regulation? So yeah, I think it's all of those things around, like, how do we actually bring this stablecoin payments and stablecoin infrastructure mainstream to show, that it really has a place, as a new global payment trail.
I love it. I want to touch back, when you're talking about growing your team, we saw tech layoffs have been massive over the last couple of years, dating all the way back to 2021, when we had this massive boost in the industry from a digital nature that went pretty much downhill from there. We're kind of level setting now. How do you make sure that you're growing but not getting too fluffy or, too bulky as a team? They have the joke, like, either you're growing or you're bloated, right? The two kind of dichotomies of building a big business like you're doing. How do you kind of balance that without trying to go too fast and having to lay out people, but with also trying to take advantage of these times when the market's hot and, the ball's in your court kind of thing?
Yeah. I mean, it's a difficult balancing act, but we've really had one eye on, profitable growth, not, and versus growth at all costs that you would see, and I think maybe that's just from where, Jesse Don and myself are from South Africa. So I think you have to have a few fingers in many pies to really build a big business out there. Slightly different way to build and scale a business versus somewhere like the US, where it's, go out and get it, growth at all costs. So I think that kind of mindset with that scale, bed down, as I was explaining earlier, has really held us in good stead. And, not that we haven't taken big bets, and I think, some of our big bets have paid off, but we have this interesting concept within the business where we have 80 or 85% of the business and the resources focusing on the BAU scale type activities, and keep scaling that. And then we have a small team that focuses on new bets where you can incubate small things. It doesn't cost you a lot of money. You can fail a couple of different times and you're not disrupted the BAU. You're still seeing the growth that you need. But then, if those new bets pay off, you can quickly add resource behind it, then move it into that BAU. And that kind of framework to operate and build new products and launch new verticals and new bets has proven successful over the last 2 years. So I think we'll keep doing that, and that really keeps you on the right side of that cost curve.
Yeah, and it keeps people still dabbling, right? And it gets probably people excited, right? When you do the same thing over here, business as usual, it's always fun to kind of go on those projects where there's not the risk of losing anything or KPIs or, getting business results from that. And you mentioned new products as we end the podcast. What are some new products, features? What can we expect from BVNK that still continue to turn the banks upside down in 2024?
Yeah, so we've been, we're quite excited about our US expansion. So we recently received our first US MTL license in Florida. We have 15 other licenses. We have 15 other license applications in. So we're looking to launch USD ACH payments alongside our stablecoin offering fairly soon in Q3. So that's quite exciting, late Q3, early Q4. And then we're seeing more and more demand for our embedded stablecoin use cases. So as I would talk through the pay-ins, payouts, and settlements earlier, we're finding more fintechs and more platforms looking, hey, I actually want to put a crypto wallet inside my platform. And, we've got a really robust, embedded stablecoin offering, and we're starting to see those come to life. So it's quite exciting to see that those embedded stablecoins and then obviously the US expansion come to life over Q3 and Q4.
I love it. And, I have people in the US licensing. There's a whole business around trying to keep track of all those US licenses.
Yeah.
As we end the podcast, what do we expect for stablecoins? I know regulations is hot. Is there anything that you're seeing, maybe the PayPal USD, have you seen this massive traction there? Like, what's the future of stablecoins that we should be looking out for in the next 18 months?
Yeah, so we actually recently released a research report with Visa Circle and the Center for Economic and Business Research. And it's really showing, it really focused on a couple of things, like the growing adoption of stablecoins as a payments method. And it's really showing that, we're predicting that stablecoin payments can get to, 15 trillion by 2030. That's off the back of a stablecoin market cap going from 160 billion today to about 1 trillion by 2030. And that's really providing a bunch of benefits, being, the release of trapped capital within, the traditional payments system today. It's faster access to stablecoins and digital dollars. It's then also, significant more use cases that you can enable through stablecoins, whether it's micro payments or other use cases in these emerging markets. So I think it's just, it's really stablecoin market cap growing, the payments turnover volume growing significantly as well, actually rivaling networks like Visa. It's already overtaken MasterCard and PayPal. And I think, it's really about that pragmatic regulation coming in and actually, supporting that growth of the market.
That's awesome. Chris, where can people find you? What's the best place? Where do you talk to people? I was assuming crypto Twitter is going to be busy for you, but I don't know, where's the best place for people to find you?
Yeah. I try to stay off crypto Twitter these days because it becomes a rabbit hole. But you can get me on LinkedIn, and then obviously BVNK, BVNK.com, if you want to reach out and learn more about the business and what we're doing.
I think people should check out the website. The website has a lot of great visuals. Which I'm a visual person, so I appreciate the visuals of what the old system looked like. Just going at BVNK. I think if you look at that old system, you see all those layers there, just like layers within an organization. That's never a good thing. Chris, thank you so much for sharing the insights. I love to play on words with BVNK. And we're hoping to have you back in a year, and you can tell us after a lot of this regulation comes into play. We can definitely have another conversation of the impact of those regulations that you've been talking about.
Awesome. Thanks so much for having me, Stephen. It was a great conversation.
Thank you.